Hello everyone, welcome back to my channel Gyani Param. In today's time, everyone who's working in a job, that is, getting a salary, has that one big dream to achieve financial freedom in a suitable amount of time. Financial freedom can have many different meanings, and this depends on person to person. A simple example of this is a person can provide all the comforts and luxuries to his family and live a very comfortable life. I am Paramveer Vilku. I'm an ACCA, MBA in Finance, and in this video, I will share with you few tips from my experience which will help you out in achieving your goal, that is, to become rich with your salary. And yes, this is definitely possible. Over the past few days, I spoke to many of my friends, colleagues, and connections on LinkedIn to check on their investing style. Surprisingly, there were few common themes which I would like to highlight before we move to the investing part. 65% of people had a home loan of an average tenure of 20 to 25 years. 95% of the people held a credit card, and surprisingly, 40% of them were paying off their credit card debts. 38% of the people I spoke to had a personal loan on them, which they took for expensive vacations or buying luxury items. Around 70% of the people had insurance policy in the name of investments. Surprisingly, 80% of the people did not have a health insurance for themselves or their family members, especially the dependent parents. Next, 33% of the people just invested in mutual fund, which was in contrast to 75% of people directly investing into the stock market and had a big exposure to the F&O side. Lastly, my sample group was between the age of 23 and 50 years, and only 12% of them invested in gold. Are these stats surprising? The answer is no. Majority of us, that is the salaried class, are in the same boat. Now let's move on to the exciting section of this video, that is how to get rich with your salary. Just you need to do one promise, that is be committed towards achieving this financial freedom goal. Number 1, get a health insurance for yourself and your dependents, especially your parents. Always remember, the middle class is just one medical bill away for going down financially. I hope nobody comes into this situation. Next, get a life insurance, that is a pure term life insurance for yourself. We always have been inclined towards buying a life insurance which is not only expensive and which pays you after a certain amount of time, but do not get into those instruments. You just need to buy a decent term plan for yourself which is not only cheap but covers you and your family members entirely. This is mandatory. Do not take this risk at any given point of time. Build an emergency fund for yourself, that is a corpus which you can utilize at any given point of time when there is an emergency. This should roughly be 3 to 6 months of your living expenses. Example, if your fixed expenses for a month is about 50,000, you should have around 3 lakh rupees in your account. I usually prefer to keep them in FDs or even in my savings account, but I never put these into any of the equity related markets or even mutual funds per se. Remember, at any given point of time, if I need cash, I can simply break an FD online or withdraw the cash from my savings account. Do not even think of investing this money anywhere. Keep this aside. You never know when you need this. Now that you are sorted with your health and life insurance and also the emergency fund, this is the time you should start thinking about investing and saving money for yourself. First step towards achieving financial freedom is to get rid of all the debts which are on you. These debts can be in the form of your home loans, personal loans, or even credit card debts which carry a high rate of interest. What one should do is list down all the loans in a piece of paper or our famous Excel sheets. List down the rate of interest you're paying for each and every loan and the per month EMI. Pay off your loans which has the highest rate of interest. In most of the cases, is usually the credit card debts, followed by personal loan and then home loans. Now that you have planned as to how you will pay off your loans, The next important rule one should know is the 50-30-20 rule by Elizabeth Warren. This rule simply suggests that 50% of your salary after tax should be spent on your needs, 30% of your salary after tax should be spent on your wants, and 20% of your salary after tax should be invested. This 50-30-20 rule is simply amazing. But when you're there earlier on in your career or have just started investing, you should have a higher proportion of savings. That is, at least have 30 to 35% of your salary being committed towards any savings. Then, whatever balance is remaining, you can spend it on whatever you like. Now that you know what amount of money you would be able to save, it's important to identify the right areas where you will invest this money. My primary preference has always been to invest in mutual fund. Mutual fund products are really amazing. In this digital era, you can compare various fund houses and their products and see where you can get the highest number of returns. Also, over the years, I have seen personally in my portfolio, mutual funds have performed really better compared to when I have invested personally or directly in the stock market. Remember, these are experts in the mutual fund houses who are investing your money rather than you being a full-time salaried person who might not be related directly to the markets investing in stocks. This can really be dangerous. So I always prefer telling my friends or my family as well that invest in mutual funds. But always remember the tagline you see on television.
Mutual fund investments are subject to market risk. Please read the offer document carefully before investing.
Mutual funds has various products. One of these products, that is equity linked savings schemes, has definitely helped me out in exhausting my ATC limits. If you're lucky to have a daughter in your family, there is Sukanya Samriddhi Yojana as well, where you can invest money on behalf of your daughter and get your ATC benefits. Majority of the people I spoke to did not have any retirement savings plan. That is a plan which can pay you pension when you retire. This was a shocker and something definitely we should look at. So how you can plan for your retirement successfully? There are two products which I have also personally invested in. The first one being the National Pension Scheme. This is a really amazing product which not only gives you good amount of returns, which historically have been 12 to 14% over the years, but also gives you extra deductions in your income tax over and above your normal ATC 1,50,000 rupee limit. I will make a separate video on NPS to enlighten you on this amazing product. Another big thing which I have done for my retirement is to regularly invest in an SIP of a mutual fund house with a retirement savings plan. It has a lock-in period of 5 years, but the results what I have seen over the years has been simply amazing again. Mutual funds is the best thing which can happen to us, so make the most of it. I'm a bit old school when it comes to investing. One of my favorite asset classes to invest is gold. Over the years, we have seen gold has risen exponentially. Now, what type of gold to buy for investments? One of the biggest products or the best products out there is the sovereign gold bonds, which are issued by the RBI. Not only it gives you the capital appreciation, but in addition to that, you also get 2.5% of interest per annum from the government. Also, it gets rid of the hassle of making charges of gold and also its security. So if it is possible for you to buy these bonds, this is a very excellent product. But always remember, there is a lock-in period of about 8 years in these bonds, but you have an option to exit on 5 years as well. Now the bonus tip and the best one which I've got till date from my mentors, and I'm sharing this with you. This can make you rich exponentially. The tip is really simple yet very effective. You need to invest in yourself by upskilling yourself at a very consistent manner. To make yourself relevant in the job market or your current job as well, it's very important to gain new skill sets. Times are changing and you have been seeing the emergence of AI, which will have a very big impact on the job industry in the future. But if we flow with the tide, It will surely help us to be relevant, as I said earlier, in the job market. So, definitely, before doing anything, make sure to invest in yourself. You must be thinking that we have almost come to the end of the video, but we haven't spoken about investing directly into the stock market. Yes, this was on purpose. If you want to be connected with the equity market, choose the mutual fund route. Over the years, I have seen many people struggling with equity investments they have done directly on their own. What is the basic reason behind this, or why they are incurring so much of losses? It's very simple. They do not invest time in studying the companies where they are investing in. We usually act on tips which we get either from our circle or even the social media platforms or televisions. Trust me, this never works. Even SEBI has confirmed the same. 9 out of 10 people lose out money when they invest in F&O market. That is, only one person is gaining out of this. So just see the ratio. Analyze your income tax returns, how much losses you have booked over the years. If you are in profit, well and good, but still choose the route of mutual funds, which is highly recommended if you are working full time in a job which is not connected to the equity markets. There might be other products as well, which I haven't covered in this video. Please do write them down in the comment section where you have been investing, which might be useful for others as well. Thanks for watching this video. And yes, it is possible to get rich with your salary. All you need to do is be consistent and disciplined. These two things will do wonders in your life. Thanks a lot. Bye bye. Take care.